What's going on, guys? Welcome back to the channel. What I'm going to do really quickly for the next couple weeks is probably just upload these little morning watch list videos to get you guys up to speed on the market before market open. I don't quite have the time to do our full morning stream that we would normally do, and since my computer setup is a little bit out of whack since I'll be moving, we're just going to go forward with a couple small morning watch list videos for the time being until I get set up in my new place. So this morning, what I want to talk to you guys about, which I think is really the big talking point so far, is are tech stocks like Apple, Tesla, some semiconductors like Nvidia and AMD going to continue selling off? How much further is this sort of correctional move or pullback in the market we're seeing going to last? That right now is sort of the main talking point as of right now. So in this video, what we're going to do is we're going to cover Tesla, we'll look at Apple, we'll talk about NKLA. There's some good news on that stock, we'll touch on that. We'll take a look at the market and then go from there. All right, guys, so hope you guys like the video. Let's get into sharing the screen. All right, so first things we're going to do is probably start with the market. I think starting with the S&P 500 would be good. So what we're looking at right now is pretty much what's happening today, okay? And so far you can see overnight we've had a good bounce. What I'm more interested in showing you guys is the longer term chart, which would be the 4-hour chart. All right, so if we look at this 4-hour chart, you're going to see that currently the S&P 500 or the SPDR ETF is holding over the price of 331. Okay, last night we dropped out in the market to a low of 330, and then we bounced and we started to hold over about 333. What I'm going to do is zoom in specifically on the 333 price here for you. So if you see it, you're going to see this little dotted line in there. And if we zoom in a little bit more, you will see that the body candles of a couple of these 4-hour candles, that's the time frame, is a 4-hour chart. You'll see that we had two candles close directly over that 333 price, and then this morning we kind of peaked below it and now we're bouncing over it. There's been many situations where I have actually seen the S&P 500 do this sort of thing where it actually comes down to what we call a half standard deviation support, and then we bounce, okay? So I do think that there is a good chance you're going to be seeing a green day or a green sort of play on the market today. Now, if you guys look down at this colorful thing down here, this is called TTM squeeze, you're going to see that we have 3 yellow bars here. Not that 3 yellow bars is anything super significant. It's really just there to show you that the TTM squeeze indicator is currently yellow as the market is coming into this low point. So we have come from sort of a higher point down to a lower point into what we believe is support. And now the TTM indicator is starting to shift to yellow, which could signal a squeeze or a bounce. So we're starting to see stars aligning for a bounce move, okay? Now, whether or not we have a really big bounce, if we recover, go back to all-time highs is another story, but we are starting to see buyers come in and support the S&P 500 down here at a price of about 333, all right? So if in the event markets do hold and we do sort of shift into maybe a green move today, it's very likely that you're going to see some of your bigger stocks maybe perform well. Next thing I want to do is pop on over to Tesla, because obviously Tesla is a major talking point right now. For those of you that tune into the channel, I appreciate you, and you guys will know that I've been watching Tesla for a long play. I already bought it long on the bottom of this green day here, and then I just bought it last night down here, and I will show you. So if we look at the 4-hour chart, you guys will know specifically where I was planning on buying. I was planning on buying down close to the 300 price point, which I did in fact do. There's a couple reasons why. Let's go back to the daily chart. So if we look back at the daily chart, I'm going to put a horizontal line right over this level here, which is at about 310. So if I put one there, and then we go look at, let's say, the 1-minute chart, you're going to see that that's the point right there, okay? This is where I started buying the stock long last night in my IRA. This is an individual trading account that we're working off of right now, but in my longer term retirement account is where I actually bought Tesla. So I ended up buying about a total of 35 shares long in this. So I'd invested, about like $12,000 or something. All right, this morning we wake up with a significant overnight gap. I closed 30% of the position, or sorry, closed 70% of the position, and now only holding 30%. So we're holding the 30% for a further gain. And I gotta say that I believe you should watch Tesla today. It looks pretty strong. We have a nice gap. There's been a lot of selling taking place over the past week or so, right? If we look at this chart, you'll see that we've had, 4 or 5 extremely big down days, or just a pretty nasty trend down. Well, that trend has gone from like 530, 540, all the way down to 300. So we dropped $200 per share on the stock Tesla without any significant bounce. So I figured that it would be worth taking some risk on the stock Tesla as we first get to that yearly support at about 308. So if I take a step back and just kind of walk you through this again, look at that red dotted line there. That's what I want you guys to focus on. So think about it. We go from 500, slam down to 300, right into that trending white line or the horizontal red dotted line for the first time. Usually we're going to have some sort of retracemental bounce in the opposite direction of the initial direction. So we're going down, 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 right into trend support for the first time. We're going to go long and try to retrace the stock. So that's what we ended up doing. All right. So we're getting that perfect bounce in Tesla off 308. Now what I want to show you is really where I think we might go. Okay. If in the event this is a retracemental bounce and it is going to do what I hope it does, it's very possible that we see the price of Tesla all the way back up to about this $386 price. Right now, 386 is pretty much the largest price target that I could justifiably pick within this bounce. Meaning, if this bounce just goes kind of straight up for right now, I think the most we could see respectfully would be about 386. So for right now, I'm hoping we have a long play on Tesla today. Keep it on watch. All right, now on to the next stock, which is going to be Apple. AAPL. So now AAPL is a little bit interesting. It is a stock that I would like to pick some shares up long, sort of the same situation that we did with Tesla, but it hasn't quite done what I would like it to do. So where I'm at currently with Apple is this. If you look at the white trending line here, that is fair value. Actually, excuse me, that's false. Let me repeat myself. If you look at this chart and look at that white diagonal line in there, that is at about 100 and call it 103 to 105. So $105 right now is currently the low risk level that I like on Apple. Then again, just because I like it doesn't mean it's going to get there. So right now, 103, 105, I see as a very respectful place to consider taking a long trade on Apple. Right now, Tesla's done that. Tesla dropped down to the fair value level. We bought it. We've bounced overnight. Apple has never actually dropped down to that fair value point, at least right now. We're still waiting on that, okay? The only thing that I'm caught up on is we might not actually reach it before we bounce. And what I mean is, if you look at the 4-hour chart, right now the 4-hour chart, Apple is trying to hold this half standard deviation level. You can see we dropped down to it, we bounced a bit, we went under it, and now we're kind of gapping up a little bit. And so really for me, I guess it's kind of about watching Apple for over or under $115 right now. I do believe if the S&P 500 and our major indexes put in a bounce today, then we could see Apple maybe perform into a long move. But I guess you could say where my concern still lies is that if we were to do this, we're going to do a quick run through of a lot of the big name stocks right now. So if we look at Apple, we still have down to like $104 before we get to statistical trend average where we could probably see a good bounce, okay? All right, now if we go over to, say, NVIDIA, okay? NVIDIA still has a little bit down before it hits 450 or so, which is trend value, all right? We go over to AMD. AMD still has a little bit down before it gets to low risk trend value, all right? If we go look at, I mean, we keep going through this. We could keep going through all the other stocks and yada, yada, yada. You get the point. that's where the concern's at. That if we were to look at a couple of these big name players that have a lot of pull on our indexes, they still have arguably a little bit of room that they could come down to an even better low risk entry level. So that's where I'm kind of at. We still have room where a lot of these big name stocks could drop a little bit before I would even see them as a better buying point. And so if in the event that holds true and these stocks want to wiggle down a little bit more, then it might restrain the overall markets from actually having that good bounce day that we had previously talked about when we first started this video. So now that we've kind of covered AMD and all the big name stocks, what I want to talk about now is NKLA. And then as we finish up, what I'm going to do is I'm going to go over S&P 500, Dow Jones, and the NASDAQ, and just quickly give you guys an overview of pretty much all the major indexes and kind of show you guys where they rest. All right. Here's NKLA. If you're not familiar, this is another company that's kind of in the electrical vehicle car space. This company here just did a strategic partnership with General Motors. That is the reason for this big kind of gap here and this big jump from yesterday. What I want to do is look at the 4-hour chart. If we look at the 4-hour chart, you're going to see that, the stock has successfully made it back to trend resistance, all right? There's two ways to look at this. If we look at the daily chart, you're going to say we're over trend, which we are. We're actually over the statistical trend, all right? So that statistical average trend is going to come into play at $47.91, or just call it $48, all right? If we look at the 4-hour chart, you're going to see that we actually just went straight to trend resistance and didn't break. So where I see us right now is you can't really expect NKLA to have another big jumping move unless the stock successfully breaks over your trend resistance at $55.40. So I could totally see some trading action where NKLA has inside days where it doesn't actually break out and it doesn't really break down, but it more or less trades inside in between the price of the 4-hour trend and your daily chart trend, which creates a range from 55 to 48. Again, let's redo that. If we look at the daily chart, your trend is down here. And if we go over to the 4-hour chart, your trend is up here, which can give you a resistance and a support. And if we go look at, say, like a 5-day chart, you're going to see that that range can be from 55 to 48. So I think it's very possible you see NKLA pretty much trade in this range maybe for another couple days. Now, of course, it's good news and it's General Motors and we want it to keep going higher, but the stock really just jumped from 32 all the way to $55 in a day. That is a big move. And if you're someone who trades, somewhat similar to me, you would look at this 4-hour chart and go, okay, so we dropped from 97 all the way down to like 30 something, and then we jumped back up to 55. So we pretty much went from overbought, follow my cursor, where you go from overbought to oversold, back to the white trend. So we pretty much went from overbought, oversold, back to fair value. So really the stock is just trading back to its statistical average right now. So I wouldn't see this as on sale and I wouldn't see this as overbought. It's really just sort of fair value, okay? So again, for me, I don't see a lot of momentum blowing up on maybe NKLA today unless you get over that $55.42 mark. All right, now the last thing I want to do is just kind of overview some of the major indexes. We're going to go over the Dow Jones here. All right, so here is something that we made a video on this months back where we actually made a video and said that the S&P 500 is in a downtrend. And at the time it was, but now it's not. I'll talk to you guys about that in a bit. But if you look at the Dow Jones, you can see the trend of this, all the lines, they're going down and they're red. So this tells me the Dow Jones is statistically downtrending. This was the same matter for the S&P 500 just a couple months back, but as the S&P 500 broke into a new all-time high, we actually shifted into an uptrend. The Dow Jones from the pandemic, pre-pandemic to pandemic to now, it's in a downtrend and it has not shifted out of that downtrend. So the statistical averages right now for the Dow Jones is actually a downtrend, okay? So as a whole, I think you might even see in the near term future the Dow Jones down to prices of 256, right? Because if this is the daily chart, our statistical average is 256 here on DJX. So I do see a reason for the markets to potentially be continuing lower here, even over the next couple months. And we're going into an election. If we look at the NASDAQ you can see is in an uptrend. But again, if we kind of take a peek at this, we went from low, oversold, back to overbought, and now we're sort of retracing. And if you look at the NASDAQ here, it appears that the NASDAQ might still have a little bit room down till we get to that statistical bounce play. Yeah, okay. Now we're going to go over to the Russell 2000, which is RUT. So this is going to be your small cap index. All right, smaller companies. You can see on the daily chart, the Russell 2000 is still in a downtrend. So let me put it this way. If in the event the Dow Jones and say the Russell 2000 actually wanted to follow their statistical trend, that would mean that we're getting ready to sweep into another bearish move, right? Because think about it. If the trend is this way, and the trend is going down, as you can see on my screen, that means the price targets are down. If we're trending down, the price targets would be down, which means our first target on the downside we would try to aim for would be the white line. Once we get there and hold, if we start to break there, our next target would be down here towards this line, and so on until the market is oversold, and then we go back to a true value trend sort of play. So to wrap this all up, you have the Dow Jones, which is in a downtrend. You have the Russell 2000, which is still in a downtrend. You have the NASDAQ, which is overbought. You have the S&P 500, which was overbought. And now the S&P 500 and the NASDAQ are correcting, as well as a lot of the big name stocks. They're all kind of correcting. All the big name stocks still have a little bit of room down until they get to kind of statistical support. So therefore, we might see this market drag a little bit more. It would make sense to me, okay? So I hope you guys liked the video. I hope you liked the little morning recap watch list for you guys. Sorry that we can't be on streaming. Again, things are a little out of place, but I hope you guys take away some good information from this video. Stay tuned for the next one coming up tomorrow. Thanks again. Smash the thumbs up button. See you tomorrow.